Hi guys, what is up? This is Aram Della. Welcome back to the channel. If you're new here, I want you to hit the subscribe button, like, and leave a comment. So in today's video, I'm going to be showing you how I made over $20,000 over the past few weeks trading gold. This is something that I'm going to be teaching you in terms of strategy, but I'd like to share with you two important points that have really helped me on this journey of trading, especially even in this past few weeks. One of the most important things is emotional discipline. The first off is what? Fear and greed. Fear and greed is one of the biggest issues when it comes to traders, and this is what actually separates successful traders from beginner traders. If you see a successful trader, it simply means this trader has actually mastered the art of fear and greed. Because trust me, when I started off as a beginner trader, one of the things that I really battled with was actually greed. Greed is more like a deadly sin when it comes to trading. Greed can actually cause you to stay in the market longer than you are supposed to, or allow you to take risky positions on the market when you have little or not enough balance for yourself. Another major point under emotional discipline is overtrading. Overtrading is something that a lot of people face. Most of the time, what I like to do is to set targets for myself. However, when I started off as a beginner trader, I found that regardless of the fact that I also, always practice to set targets for myself and I hit my targets, I always find myself trading. That's why it's actually called emotional discipline. You need to train your mind to stop trading when you've actually hit your targets. This is something that you need to focus on to become a very good trader. It takes discipline, practice, and patience to be able to achieve this particular goal. Consistency under emotional discipline will be the third point I'll talk about. Now, when it comes to consistency, I'm not talking about just continually winning on the market or continually losing on the market. This has to do with you following your plan all the time. For example, you've told yourself that on your $100 account, you're going to stick to 0.01. And for the first few weeks, you actually stick to the goal. And then you miss it on the third week. That is not consistency. If you actually go by that route, you're actually not going to become consistent when it comes to trading. You need to focus on building that level of consistency to become a successful trader. So building a consistent plan is what's going to keep you. So you want to tell yourself, set out criteria for yourself. Ask yourself, hey, am I going to be sticking to this plan? Am I going to be using this amount of stop loss? Am I going to be waiting for this particular criteria to enter the trade? And this is what's going to give me access to become successful over time on the market. So these 3 points under emotional discipline, greed and fear, trading, and consistency are the 3 major points under emotional discipline to becoming a successful trader. The second and most important point, which is also a very popular point, is risk management. Yes, I know you've heard about it several times, but trust me, this is one of the core important things when it comes to trading. If you don't have any risk management, you are not going to last in the market. I'm going to be talking about 3 important things under risk management that can guarantee you success if you follow this to the core. The very first of it is stop loss orders. I know a lot of you, when you are taking a trading position, you do not even know how much you're going to be losing on a trade. But let's even just forget about how much you're going to be losing on a trade. Some of you don't even set stop losses at all. Most of the time, when the market is getting into your stop loss area, you tend to start to move it because first off, you've not accepted your risks. Now, the fact that you don't have a stop loss order is a big red flag when it comes to you trading on the financial market, because you can never ever outsmart the market. The market can continue going in a direction for a very long time. It's going to wipe you out and then reverse. Yes, I know most of you have been in that situation at all. Let's talk about the previous drop on gold. This particular movement has dropped over 800 pips on the market. Imagine you were having a $10,000 account and you had entered about 2 lots on the market just trying to scout the market, and you're like, you know what, I'm just going to hold it because I cannot afford to lose maybe $2,000 because you're in a loss of 100 pips. Imagine if this market had dropped 800 pips against you, you would have lost your $10,000. So you can never outsmart the market. Never think that way if you want to become a professional trader. The very essence of stop loss orders is to limit the kind of losses that you make on the market, and this is crucial to your success as a forex trader. The next important thing is position sizing. Position sizing is what guarantees us to know how much we are going to be risking on a particular trade at a given time. So let's say you have funded $1,000, $100. You want to be asking yourself, this particular trade that I'm about to enter, how much am I going to be losing on this trade? If you realize that this is something that you cannot go with, you first of all must reduce your risks. So the golden rule of forex states that you cannot risk more than 1 to 5% of your capital on any given trade. However, most of you defy this particular golden rule and go against it, therefore losing most of your funds. If you can stick to this particular rule, it's going to help you to become a successful trader, even when you are trading proprietary firms, which is prop firms. Another and important, crucial, but the last point is risk to reward management. What is basically risk to reward? Risk to reward has to do with the ratio between what you want to risk and how much you want to gain. When it comes to the world of Forex, we don't want to be risking 1 for 1. We want to be risking at least 1 for 2 per the way I actually trade. So it means that if you are risking $10, then you want to be making $20. If you are risking $40, then you want to be making a minimum of $80. So depending on your trading strategy, you can be risking between 1 to 3, 1 to 2, 1 to 5. I've seen people go as high as 1:16, but the minimum for you to start off with is 1:2. So it means that whatever that you are risking, you want to be making times 2. This can help you to limit your risks when it comes to trading the financial markets. With all these points, I hope you've learned enough. Now let's head over into the charts. Let me teach you what exactly I got to know and how I made over $20,000. Let's get into the charts. Alright guys, so we are right here in the charts again. Now before the bearish move on gold, like before gold started its crazy drop to the downside, I was already anticipating it. Now how did I basically anticipate it? I always tell my students that structure is structure, right? Now the very and most important thing you need to be looking out for is levels and patterns, right? Now you look at this particular area as an area of strong resistance in the market. This is gold's all-time high, right? There is a possibility that the market might come and interact in that area, so I decided to draw a pattern from this particular area even into this area, and also decided to do a very simple one here as well. Now you can basically tell that I've been teaching you guys about patterns all the time, telling you guys that the power of 3 touch is very important. Now usually we are looking at 2 areas where the market can reverse from. The very first area is the strong area of resistance, and the second area is the 3rd touch of the trend line, and then a very strong movement from that particular area. So looking at this market, right, I was not so much interested. We were catching a lot of buys in the VIP, and so we started looking at the particular area where price was heading over to. Now we could clearly tell that price had broken strongly above that resistance area for the sells, and then price has started creating its all-time high. Now a lot of people over here, because they did not have the understanding of patterns, they did not even know that the market can reverse around the 3rd touch of this particular trend line. But let's look at what actually happened now. So you realize that when price came, there was a very strong movement from that particular area. Now if you were on, say, the 30 minutes time frame, right, and then you spotted this beautiful indication right over here, maybe price came, closed above the trend line, and then the next candle was a doji. This gives us a strong indication that this market is confused and it doesn't know where it's going. And the next candle, which is going to be on the 30 minutes, would have been a strong indication. However, we would have entered on a very good indication, say on the 15 minutes, right, for a very good opportunity. This would have been a beautiful tweezer information right here. So for example, the next 15 minutes candle came and there was a closure below the level. I would have entered this trade right over here, had my short positions right over here, right, put my SL right beneath structure about 27 pips, and targeted at least the next low. Now let's see how this particular trade played out as well. Really tell that our TP was being hit over here. However, I was not even up for this trade. So let's look at how I decided to catch this particular trade when price had already taken its turn against me. So I remember I had some shorts in and around this area as well, which I'll be showing you guys later on, right? I had some shorts because definitely when a market comes into a level, right, and shows us strong indications, one of the most important things to look out for is strong bearish indications, right, for shorting opportunities on the market. But I was not so much interested in that. I want to show you guys a very simple system. So I knew for a fact that the market could have equally come into this particular area again. So I'm just going to draw my zone in this area for possible shorting opportunities, right? So at this point you can be patient and wait. Now when price has come into that zone, we can tell from this particular area that when the market came into this zone, right, we saw the market closing above the trend line but then closing strongly below the trend line, which indicated a strong reversal downwards. If you watch my previous videos, I already told you guys that anytime you see the market breaking strongly above a resistance, don't be in a hurry to start buying. Wait for the next candle. If the next candle closes strongly beneath it, then it's an indication that the market is going to short. Right there and there, we saw this strong 15 minutes candle closing like this. Now, in this particular scenario, you definitely cannot be taking the trade over here and having your stop loss right beneath the structure, because we want to be having our stop loss as tight as possible. This is going to be a 150 stop loss, so we cannot have that. So guys, right after we saw that very strong bearish indication, we definitely cannot say we are going to be jumping on this trade, because this candle alone is about 150 pip movement on the market. So what I'm looking out for, clarify that strong break and to tell me that, hey, market is ready to start selling, is that I wanted to see this candle or this particular level being broken, right? And then I was looking out for a retest. So I was very patient. Once I saw the break, I was very confident to believe that definitely the market is what starting a newfound uptrend. So now I was looking out for the market to come back into that particular area, right? Which is what this particular area here as well. This is the last point that I'm looking out at, right? And I'm saying that I want to see how price is going to be reacting. This was a retest level, and this is what an equal high level. Remember, this is a retest level. Price could have also reversed from this point, but price decided to what come to the this particular high area, because when the market is in a downtrend, we are looking at the market forming a series of what lower lows and lower highs, lower lows and lower highs. Most of the time, the market can retrace from this lower high, or the market can come and create equal highs, and that's the same criteria we are seeing over here, right? The market is forming series of what lower lows and lower highs, lower lows and lower highs, lower lows, and the market retest area, but then the market is possibly heading into this area as well. So that is what we're looking out for, and I was just very patient enough, right? So I'm looking at this market now. Once price comes into this area, what am I looking out for strongly? On the 30 minutes, I'm looking out for strong bearish indications. If you look at it beautifully on the 30 minutes, we would have seen that we are looking out for strong bearish indications on the market. And right over here, I'm looking out for strong bearish indications. I'm watching, and then I spot one beautiful candle right over here. So right at this point is where I enter my short positions. It was a London session trade, right? We have our stops, and then where are we targeting? We are targeting this area as our first TP, this area as our second TP, right? And this particular trend line, this particular line area back into that resistance area. Now let's see how this trade played out. And just like that, this trade gave us about 200 pip move, right? I remember very well, I did about 100 pips on this move, which was like, 100 pips, and I did 10 lots on this trade. I did about $9,000, $8,000, and I took profit, and then the market will continue to move in that level. So this is a very simple system, and you realize that the market will continue to trickle its way down. Let's see how this market continues going. This market did 500 pips from this particular point. Market did about 760 pips before it started its new upbound trend, right? So right over here again, we see 860 pip movement just by catching it out. So when it comes to looking out for very big moves in the market, one of the most important things is don't trust the first move. The first move is always a fake out. I always tell you guys, this first move over here is always a fake out. The market is definitely going to pull back again for the real move to begin. So anytime you see an opportunity on the market, anytime you are looking out for a trading opportunity on the market, and you realize that there's a big move about to come, don't be quick to jump. That is the fear of missing out. Don't be quick to jumping on the first move, because the market is definitely going to come back and give the real buyers or the real sellers that great opportunity in the market. And this is how we made over 860 pips. We've been smashing the VIP. If you're not part of my Signal community, make sure to do all and join my Signal community. Search for Pay MarketGod bot on Telegram, and to join my free community, search for MarketGod community. Please be careful, because there are a lot of scammers online that are charging people and saying that Aram does investments and all sort of stuff. I do not do any sort of stuff. If you want to join any of my services, you need to use a bot. I do not receive payments manually. I use payments only with a bot. So you search for Pay MarketGod bots and join the VIP today. I'm waiting to see you. Let's make some bag together. Peace out.